Hi everyone, Dwayne Roth with the Roth Companies with an educational economic update for May 2019. In this month's video, I'll discuss some of the major headlines that influenced the markets in 2019 in the month of April, as well as going into some of these developments that could impact you as an investor with your overall wealth management. Please stay tuned for at the end of this educational content for a disclosure, just to keep our attorneys and our compliance folks all happy with our delivery of our message today. With April, the month behind us, it was a positive month for the markets. We were all happy to see that, of course. Actually, all three of the major domestic indices posted gains. The Dow Industrials added 2.6%, and the NASDAQ Composite was up 4.9%. Meanwhile, the S&P 500 increased 3.9%. Crazily enough, that wrapped up its best 4 months of performance in almost 9 years. So what really happened last month? We received stronger data with the updates that many people anticipated, and especially looking at the economic growth and corporate earnings, that was really positive for us as we went and saw these returns blossom. For example, the latest reading for the GDP, or gross domestic product, indicated that the economy grew by 3.2% in the first quarter. Economists predicted the growth was supposed to be closer to 2.5%. Instead, we realized a much greater growth for the first quarter, and that was the best since 2015. First time since we've seen that type of growth exceeding that large of a 3% increase between January and March of a year. Corporate earnings have also been surprisingly strong. So far, we've been really pleased to see that. When earnings season started, many investors were preparing for a storm because markets became choppy with these results being problematic. For months, experts discussed how the effect of the 2018 tax cuts could no longer really help drive corporate profits. As a result, the earnings would be disappointing, but yet 2019 really posted excellent returns so far. By the last full week of April, the initial earnings results were telling a different story. Facts said a research report that we track almost had half of the S&P 500 earnings report that actually had 77% beat their earnings estimates. Of course, we still have many reports to receive. No one really can say how this is going to stack up with all the companies, but 77% is a strong factor. With the actual earnings year over year, and looking at Credit Suisse as another indicator, the forecast actually showed an increase as much as 3% with our GDP. That being said, we're looking at the corporate earnings to be better than what many people expected. Stocks responded to these results, even climbing even higher, which was great. And in the last full week of April, both the S&P 500 and the NASDAQ Composite reached new record highs. And all three market indices had experienced double-digit gains for the year. Wonderful for investors. The markets have come far since the decline that we experienced in the last quarter of 2018. And this month, we see where we're headed. From the earnings season to the Federal Reserve meeting and beyond, we have a lot to really analyze as far as the data we crunch and try to put together good wealth management plans for our clients. That being said, we're happy to share our educational insight as well as provide you the best planning moving forward. And as we look at today's economy, we want to make sure we're helping you protect, grow, and reasonably achieve all of your financial goals and objectives. Once again, this is Dwayne Ross signing off for the May 2019 economic and educational content. Everyone have a great day and a good week ahead. Talk to you next month.